This is Scott Bauer on the floor of the CME Group. And much like we see in the equity market, volatility continuing in the energy space. Early today, we saw oil actually continuing to get weaker, and then all of a sudden we saw a major turnaround. Oil rallied about 5%, closing up about 3% on the day. That weakness and the move higher was basically on news coming out of OPEC, with Saudi Arabia leading the production cuts coming out of OPEC. Now, earlier, we did see Russia actually increase their production about 4.5%, but that was outweighed by what we saw with the production cuts coming out of Saudi Arabia, coming out of OPEC. In fact, Saudi Arabia cut about 420,000 barrels per day in December, more than expected. That's down to about 10.6 million barrels per day, and total OPEC production is now down about 530,000 barrels a day to a total of about 32.6 million barrels per day. Interestingly, the West Texas Brent spread has actually widened back out. For a good portion of the last part of the year, we saw that spread about $9 or $10. Actually, at one point, it went to about $11. We saw it contract down to about $5. It's now widened back out to about $9. So oil prices in general really mirrored the equity market towards the last quarter of the year, the last couple trading months of the year, really trading more on worries about global slowdown, demand, supply, rather than the unrest that we saw coming out of Venezuela. Now, switching over to natural gas. Boy, what a drop from those highs that we saw just about 6 weeks ago. And the drop continues. In fact, we're down below the 200-day moving average right now, down at around $2.80. It was just 6 or 8 weeks ago we saw natural gas almost approaching $5 on that big spike up. Now let's see if it holds below that 200-day moving average. Scott Bauer on the floor of the CME Group.